Good day, Amazing Connections. Today we are here to provide you with a comprehensive tax opinion regarding the relevant deductions and allowances applicable to your recent investments in solar panels. We have based our opinion on the information you have provided and on relevant tax legislation. The following will be addressed in the presentation: VAT, the purchase of solar panels and installation costs, the treatment of electrical components, inverters and mounting structures known as the balance of systems, permits, insurance costs and backup batteries, maintenance and inspection costs, and lastly, consultation fees, credit losses, depreciation, and the salary of employees. To claim a credit loss Section 11I deduction, the expense needs to become bad during the year, must be previously included in the taxpayer's gross income, and has to be payable to the taxpayer. Therefore, in Amazing Connections case, the credit loss of 1.3 million may be deducted. The salaries of employees meet the general deduction formula, and therefore 1.8 million rand can be deducted. Depreciation is not accounted for in tax and therefore cannot be deducted. On the 1st of June 2024, Amazing Connections plan on investing 120 million into solar panels. These panels are considered capital assets that provide a long-term benefit and therefore cannot be deducted from taxable income under the general deduction formula. However, under Section 12B of the Income Tax Act, there is a capital allowance available for renewable energy assets. An extension of Section 12B came into Act called Section 12BA on the 1st of March 2023, which will be applicable until the 1st of March 2025 and takes preference over Section 12B during these periods. This section states that 125% of the costs can be deducted as an allowance. Installation costs are included in these costs because these installation costs are necessary to get the solar panels into their present condition, which therefore also creates an enduring benefit. Therefore, the total costs on which allowances can be deducted is 195 million rand. For the year ended 2024, Amazing Connections can claim an allowance of 211,956,000 rand, which excludes VAT. Additionally, as a registered VAT vendor, Amazing Connections can claim an input VAT of 25,435,000 rand.
According to Section 23 of the VAT Act, if a company's taxable supplies in a given 12-month period exceed 1 million rand, the company is forcefully and compulsorily required to register for VAT. Upon inspection of Amazing Connections financial statements, it is evident that the taxable supplies exceed 1 million rand, and therefore all the VAT consequences had to be taken into consideration in doing any calculations for deductions. For the purchasing of a balanced system, Section 12B was taken into consideration. If all of the relevant criteria have been met, a 50% deduction will be allowed on the asset as it is used in the production of renewable energy. A 30% deduction will be allowed in the next year of assessment, with an ultimate 20% deduction allowed in the subsequent year of assessment. However, there has been an amendment made and Section 12BA has been added to the Income Tax Act. If the criteria is met with this Section 12BA, a 125% deduction on the cost of the purchasing of a balanced system will be allowed. We have assumed that Amazing Connection will ultimately want to minimize the tax liability, and therefore Section 12BA is applicable to the purchasing of a balanced system. In determining a deduction for the permit, Section 11GD was taken into consideration. However, due to SARS not allowing any deductions for the costs incurred of the permit, as stated to us, we therefore took a deduction of 0 on the cost of the permit.
So the $500,000 for consultation services will meet the criteria for a Section 11A deduction. Now remember, our written tax opinion contains all the legislation sections and the relevant case law we took into account to make decisions. So in this case, the consultation fee was incurred for cost-saving purposes, to move away from using generators, which has become very expensive. So we concluded that this amount is likely to be revenue in nature, therefore deductible under Section 11A. For the inspections and feasibility analysis, in short, there will be an assessment to determine where the best location for solar panel placement is, and additionally there will have to be inspections and preparations on the land for installation purposes. The evidence that you have provided us with clearly points that these costs will create an enduring benefit for the income earning structure of the company. Therefore, it's capital in nature. There will not be a Section 11A deduction, but these costs will have to be capitalized to the cost of the solar panel system and will be subject to a capital allowance. SARS has determined that the write-off period for backup batteries and solar panels will be 5 years. Maintenance costs. It is estimated that the solar panel will require both minor and major services, minor services performed annually and the major services performed every 10 years. We have concluded that the minor services will be deductible for Section 11A due to it meeting the criteria and being revenue in nature. But the major services can be considered to be capital in nature, as it clearly secures a permanent and enduring advantage to the capital asset. Therefore, this amount will also be capitalized when incurred and be subject to a capital allowance. I thank you for your time. It is my privilege to hand over to my colleague.
Ladies and gentlemen, today I want to discuss the deductibility of insurance costs and the acquisition of a backup battery for Amazing Connection. First, regarding the insurance cost. Under Section 11A of the Income Tax Act, expenses incurred in the ordinary course of business to produce income are deductible. Insurance premiums for our solar panels, essential for our business, fall under this category. These premiums safeguard our operations and ensure income continuity. Given that the 200,000 Rand insurance premium is VAT inclusive with a VAT rate of 15%, the VAT input amount would be 26,087 Rand. Therefore, the deductible expense for income tax purposes is 173,913 Rand, and 26,087 Rand can be claimed as input VAT from the tax authorities. Now regarding the backup battery. This battery bought for 6,450,000 Rand is a capital asset providing long-term benefits. Section 12B of the Income Tax Act allows for capital allowance on movable assets used for producing renewable energy. Amazing Connection can claim an allowance of 125,000 Rand, totaling 7,010,870 Rand. Additionally, we can claim an input VAT of 841,304 Rand. If the asset is brought into use after 1 March 2025, the allowances are 50% in the first year, 30% in the second year, and 20% of the cost in the third year. After thoroughly examining the applicable tax laws, regulations, and legal precedents, we have determined that there are a variety of deductions and allowances that may be claimed. Now, before concluding, I must share an important disclaimer regarding the information presented today. Tax laws can change, potentially affecting the accuracy of the information provided in our tax opinion. We assume no obligation to update this document after 27 May 2024 or to advise of changes in laws and interpretation. Our advice cannot be used to avoid penalties from SARS. This document is for internal use and must not be shared without our written permission. By use of this tax opinion, you adhere to the disclaimer and any other stipulations mentioned above. Thank you.